Hi folks, welcome to the Excellent Universe channel. It's a day where we've got a lot of cars, too many people, too many buildings, but still we've got beautiful sunny times. And they say the stock market has been crashing, and some people say don't sell, just hold on for the long term. Well, what if you have bought by borrowing money, bought into the stock market, and you've made some money? Maybe you've even lost a little money, but if you're not going to be able to pay that money back if we have a worse crash, what have you been doing? First of all, it's very dangerous to borrow money when you might not be able to pay it back. That's sort of risky behavior. A lot of people say you should never borrow money. Don't do it. You want to be able to go bankrupt and owe people money, maybe never pay them back, ever. And you've caused trouble, and you bought in possibly to stock markets in the United States that are incredibly high priced. That's like buying something when it's marked up instead of marked down. And now if you can sell now, which would it would actually increase the crashing of the market, that's true. But if you won't lose too much money and avoid bankruptcy, even if you lose some money, maybe you make a little money, or break even, whatever. But if, as I said, if you would go bankrupt if the stock market crashes even more, because the chances are, since it was so high priced potentially when you bought in, now this is not financial advice, I'm not a financial advisor, do your own research, you got to make all your own decisions, don't trust a YouTuber. But what I'm saying is, if you cannot handle a major market crash where it goes down 60%, because it will make you bankrupt, because you shouldn't have been borrowing, as I said before. It's called margin, buying stocks on margin. If you did that and you can't afford it, yes, you should sell everything, or at least sell whatever you bought on margin, so you're not going to get what is called a margin call. And now, if you've got enough money, I'm not saying this is for everybody, I'm saying for those people who could not handle a crash, because it looks like we're going to get one. Things are very overvalued. Historically, it looks like there's always been a crash in this kind of situation where stocks lose 30%, 40%, 60%, or worse, up to 90%. So I don't know who you people are that are, especially people who do derivatives, options, futures, holds, puts, whatever you're doing, you could lose a ton of money, and maybe what you've done is very financially foolish. It's going to make you bankrupt. It might make you smarter. And I'm just telling you, so the wealthiest investor, not the wealthiest person, but the wealthy investor, which is Warren Buffett, he doesn't mess with anything. He just owns companies, owns stocks. Doesn't do any fancy things. Certainly doesn't borrow money to buy something. Would not mortgage or refinance property to buy stocks when they're super high priced. In fact, he would never do it, never. So learn from the best. When you get advice, you got to make sure whose advice you're following is an expert, a successful expert for many decades. You can find somebody who's an expert that's been good for 50, 60 years, like Warren Buffett, not some 30-year-old something person, and use the person who has wisdom of the ages and who has the success. The successful person who has been doing it for many decades, those are the ways to follow. I don't agree with everything Dave Ramsey says, but he says don't borrow money, and I agree with that. And he's financially successful, he's a rich guy, and he's old, and he's an expert. Those are the kind of people that give you good advice. And just trying anything that you heard, you saw, somebody convinced you to do, that's how you lose money. And so, yes, we'll probably have a stock market crash because of people that borrowed money to put into stocks when they're super high priced, and maybe they already lost money, they're losing money right now. And so then it causes a crash, and people who were smart and had cash, which that's another thing I recommend at a overvaluation time like this, at least 30% of your investments in what they call a liquid finances. It might be short-term treasury bills or money market or cash or even gold and silver. Silver is volatile, but possibly gold it's at least better than most stocks in this situation. It's near the late January of 2022. Now, if you're listening to this at a different time, then of course you can ignore the information about the date and the situation in the stock market. But don't ignore the part about borrowing money to buy securities if you're gonna put yourself in danger of bankruptcy. So anyway, thank you very much. Be safe, be careful, and get out January 24th before there's a huge crash, which might not happen. It might not happen, but it looks very likely. Sometime in the next day to 3 years, the stock markets in the United States could probably fall at least another 40%, even up to, from their highs, could come down 90%, 80%. It's all unpredictable because the future doesn't repeat the past exactly, but it rhymes, as somebody famous said. Okay, thank you, bye.